Hello everybody, this video is entitled Black Swan 3 times per year for no reason. And as you know, I have not trusted this market since the events of October 10 of last year. Government shutdown had begun for a few days. You may remember that epic liquidation wipeout, which truncated the bull market in crypto, which led to enormous losses in crypto and in a lot of stocks later on, liquidity systems, liquidity issues under the hood. And ever since, I have not trusted this market. And in fact, cash for me is getting high and it's alarming. And it's annoying, and I feel also bad for my Patreon members because, yeah, I literally buy 3 or 4 times a month now, and they're like small buys, right? I used to buy a little bit every day, but I've realized that this market is broken. This market is not normal. No, folks, like it's pointless to go on X and act like you're the best. This market is not normal. Like, the Nasdaq is not supposed to trade 4% down in a single day on vibes in June now, right? Early June, worst day since April 25, so worst day in a year, a little more than a year. And by the way, we also had a bunch of very, very close, really, really bad days in early March, you may remember. So how many black swans a year do we get? How many do we get? Look up the historic drawdowns for, say, the Nasdaq or for S&P, and look at the period since 2020, since February 2020 until today. We've had epic wipeouts after wipeouts after wipeouts after wipeouts. Like, ask yourself this question: Meta was down close to 8% today, and to use a Gen Z term, sorry about it, but it trades on vibe. Meta was down because of a rumor from the newspaper that thinks Bitcoin is like thief, and that rumor was like, oh, they're gonna sell shares. So you have a thief level understanding of Bitcoin type newspaper who maybe a rumor came from it, and Meta goes down 8% intraday. Like, this market is designed to shake people out. And it is extremely, extremely unfortunate because I think, you see, I was lucky to be investing throughout the 2010s. And I can tell you, in the 2010s, it was not nearly as bad. We had a little bit of bad event in 2018, late 2018, December, you may remember that. And that was an interest rate fear, by the way, then too. But that was it. That was it. And we've had crisis. We've had 08 crisis type, much shorter term. They were much. All of the scares we've had in the 2020s. I want to be clear. They were shorter term than 2008. 2008 took a long while to recover, and I wasn't really investing back then. But ours have been the shakeout type of drawdown, which is very, very tough because, it's one thing to say, I'm capitulating, I'm selling, and you have a 2008 or 2002 type of situation where the stocks get years of recovery, where it takes years for stocks to recover. We live in a market where you have no time to accumulate the position because stocks, you look at Micron, right? 10x in 7 months or 8 months. So you have very little to no time to acquire a position, and you also have no time to sell a position because you have such wild swings, which quite frankly seem to be designed to wipe people out. And so I don't know if this is an artifact of liquidity getting tight in the system. Most likely, this plays a major role, right? The banks are very, very tight. How many banks are on bankrupt paper, or on paper bankrupt? Paper bankruptcies, how many of these do we have, right? Where the assets are upside down, where they own a bunch of bonds from the 2010s. These bonds are upside down, right? That was the whole Credit Suisse UBS story. Well, that's true for much of the insurance sector, much of the banking sector, a lot of the industrials, mortgage, states, pension funds, the government itself. And government's a little different, of course, because they issue the debt. But we live in a system where now the uncertainty, moves markets like black swans. Mild uncertainty moves markets like black swans, because this morning that was a very mild, uncertain thing. Okay, okay, people have jobs. Well, that's nice. Plus, we all know that measure is very, very flawed. The jobs numbers, we all know, they always revise them. We know it's super flawed. So, okay, the market is a little better than usual. The job market is a little better than usual. And the market entirely freaks out and says, oh, they're going to raise interest rates. As if, by the way, raising interest rates had been a headwind for a lot of these tech stocks, which it hasn't, right? It hasn't prevented them from 10xing. So the market is trading on vibes, and this is very unfortunate. In many ways, stocks are looking wilder than crypto. This is another hot take I have. But stocks are actually looking more wild than Bitcoin, more wild than crypto. I also want to mention there's no safe haven out there. What is it? Unless it's the savings account at JP Morgan paying 3%, and 3%, of course, doesn't catch up inflation whatsoever, monetary inflation, at least the inflation that we really care about. So stocks are crazy. You have a huge shakeout risk. Crypto shakeout risk, I would argue, is less big as it used to be, but it's still there. And then you have real estate. Again, think about what I call the mortgage chokehold. Real estate has been on hold for about 5 years now, and we keep waiting for the rates to drop. So the rates are not dropping. So and we keep delaying and delaying and delaying. So this is just insane. Surviving the 2020, I know I repeat myself, but surviving the 2020s is our only job. Surviving the 2020s. In 2029, maybe things get less wild. And I don't know if this wildness has to do with liquidity. I don't know if social media plays a role, because everybody's engagement farming now. So everybody's trying to scare people out of stocks. How many people called for Bitcoin 10,000? How many people did that? The newspapers are doing the same thing now. So anyways, talking about crypto versus stocks and who's riskiest, I think this chart is very interesting. Of course, on this channel, we've been pretty hurt by Bitcoin. That move was very bad. I mean, it was a really, really bad move. I can't believe we're back to the lows of February. But in many ways, that move was less violent than, say, Broadcom. Look at Broadcom. In a matter of 2.5 days, down 22%. Bitcoin down 17% in 5 days. Okay, we're down a little more than 20%. We're down about the same if you go back 20 days. And it's interesting, of course, for Bitcoin and Broadcom, because they happen to be about the same size asset. But Broadcom is like a super company. I mean, Broadcom is at the heart of AI. They're the main ASICs maker. It's super stable. They're the king of safe acquisitions. They have a rockstar CEO. Broadcom is as steady Eddie as it gets when it comes to a business. It's even, I would argue, one of the more steady Eddie semi stock out there, and it's dropping more than Bitcoin. So it's a problem with a denominator, in my view. Like, I'm willing to admit that Bitcoin's risky, but then why do you have a stock like Broadcom who's trading much, much greater swings in valuation, right? And I could extend that same thing to Nvidia. It didn't really matter what you did today. You were punished. All of the stocks were punished the same. And of course, the stocks we own on this channel were punished much more for reasons entirely unrelated. Like HIMS was down close to 10% at one point today. What did HIMS do? Seriously. HIMS has nothing to do with all of this. The product they sell is very much essential at HIMS. The product they sell is just like cigarettes. And cigarettes are up. Procter & Gamble are up. And I don't mean it in a bad ethical way. It's like cigarettes in the sense that it's a staple. You need it, right? ED pills, you're going to keep selling the ED pills. People are not going to cancel their ED pills subscription. That's what I mean by it's like cigarettes. People who are addicted to smoking, they're going to keep smoking. So this is why a lot of the consumer discretionary, like Costco's up, Procter & Gamble goes up. Yeah, I guess people don't stop buying soap. Well, guess what? It made absolutely no sense. Again, another stock that trades on manipulation, that trades on vibes. It's entirely ridiculous. And of course, strategy continuing its decline. But then again, I don't know what to tell you. The job in the 2020s is to not get wiped out. And by I shouldn't use the term wiped out. I should use the term shaken out is the term I want to use. Like other people who quits at the bottom and like, oh, I'm done with stocks forever. And then they move on and, go to real estate or something else, right? No. Anyways, no wonder the returns in something like real estate are so low. No wonder so many people are into like residential real estate rentals. Why are they into that? Because they don't see the crazy price every day. They don't see the crazy stock price every day. And the more rational you are, the more this is tough to understand. It's almost like the smarter you are, the tougher it is to dumb yourself down to try to understand and explain these moves, because they cannot be explained with logic. This is way. They went too high, too fast for many of these stocks, and now all of a sudden everything dumps too fast, too low. It's a casino in the short term. I don't know what we need to do to decasinify the markets. Do we need to bring them on chain? Do we need to bring them 24/7? Probably, because by the way, the market's closed and now Bitcoin's bouncing back. And a lot of stocks in after hours are bouncing back. So maybe something is going on with the exchanges themselves. Like, this is so nonsensical. And it's extremely frustrating, of course, when you spend so much time studying these companies and actually understanding them under the hood, and then you have the market do that to you. It's just the way it is. And people say, oh, you shouldn't care. Well, prospect theory tells you what, right? Prospect theory tells you that loss is actually painful. Like, you actually feel pain, right? Who's going to go out to dinner tonight? I'm not going out to dinner tonight. I'm going on a walk. I'm not going out. I'm not spending any money this weekend. I'm staying put. I'm staying home. I'm spending zero money this weekend because I'm pissed. And that's the wealth effect, of course, very well documented, linked to prospect theory. People, when they see that, they don't want to do anything. They feel pain. And the fact that this happens also so often now, multiple times a year now, also, I think you have to consider the stock market for your health, for your own mental health. And this is bad because this is getting more and more people back into the indices, back into the index. So the stock picker is at a tremendous disadvantage from a psychological standpoint compared to the indices. That's also another problem. We have very little price discovery. And I think it's a blessing we're getting SpaceX going public, to be honest. My guess is that if this craziness doesn't stop, my guess is that Elon Musk is really going to regret going public. That would be my guess. My guess is he's going to regret going public. Because get ready for minus 15% days on SpaceX too. Anyways, it's just that's why so many companies are just staying private and going private longer, because when you deal with VCs, you at least deal with some semblance of sense when you deal with VCs. I think that's why so many companies are just staying private. I wish we had more access to either VC investments or either, I think prediction markets, like I said in my prior video today. I think prediction markets, I think, offer a very interesting story. If I could just bet on a company's top line and invest in the top line and not have to deal with the shenanigans of the market, I totally would. Anyways, moral of the story, I still don't trust this market, and boy, am I glad I don't trust it. I do not trust it. It's held by a tweet. I just don't trust it. A tweet can make it go up 10% or make it drop 15%, and we don't know when the tweet comes. A tweet or a press conference from Walsh, which is going to be the big deal, the next big deal. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. I'm going on a walk. Have a wonderful day.